Good morning and welcome to another edition of From the Desk of Dan White. Well, we're in the dog days of summer here, mid-July. So I think we're on about our fifth heat wave of the season. And we usually start these reports with a market update. And there's not really a whole lot going on. I mean, the inflation report came in this morning. It was a positive report. They were expecting about 3.8%. It came in at 3.5%, which is good news. It probably means there's no rate hike in the imminent future. I still think we're going to get a rate hike this year, but it's probably not at the next Fed meeting. And it's all dependent upon the war. I mean, the war is like Groundhog Day. You know, it's the same thing over and over. We have a ceasefire. We had a ceasefire that I believe was signed in pencil. It came, it went. We're done fighting. We're not done fighting. The Strait of Hormuz is open. It's closed. Right now, we're bombing Iran again, and the Strait is closed. So. And oil just spikes whenever this happens. So I think we're going to see inflation go back up next month. And it's just a never-ending thing. So I think we will see a rate hike this year, and rate hikes are not good for the market. So one thing I did want to point out, it was fairly big news. Last month, Alan Greenspan died. Alan Greenspan has been called the greatest central banker of all time, and I don't know if that's true or not. But he died last month, and he became chairman of the Federal Reserve on August the 11th of 1987. He was in there a long time. He was in there till about 2004. But Greenspan did one thing, or started one thing, that really to this day impacts us as we move forward. And I think we're facing kind of a global reset monetarily within the next 3 to 4 years. But Greenspan became chairman of the Fed on August the 11th, 1987. It's kind of interesting. I started in the financial services industry September 1st of 87. 2 months later, on Monday, October the 19th in 87, the stock market fell 22.6% in a single trading session. That one-day loss remains, in percentage terms, the largest single-day decline in the history of the Dow Jones Industrial Average. Larger than anything in 1929, larger than anything in 2008, larger than the worst day of 2020 during the COVID bust. It was by a considerable margin the worst day the American stock market has ever had. And Greenspan was on a plane to Dallas when it happened, and by the time he landed, a significant portion of the American investing public had been ruined on paper. He flew back to Washington that night, and over the next 12 hours, in a series of phone calls with Jerry Corrigan, the president of the Federal Reserve Bank of New York, Greenspan decided he was going to bail out the market. On 8:41 a.m. on Tuesday, October the 20th, before the market even opened, the Federal Reserve issued a single statement. It is one of the most consequential sentences in the history of American finance. The Federal Reserve, consistent with its responsibilities as the nation's central bank, affirmed today its readiness to serve as a source of liquidity to support the economic and financial system. I mean, that's Fed speak jargon. In plain English, what Greenspan refused to say, he said, whatever investors need, we will print. And the market rallied. By the end of the year, stocks ended up 2% higher than where they started the year. A new verb entered the language of Wall Street. Stocks were now and would forever be Greenspanned. The lesson of 87 was the Fed's put. From that day forward, there was a put option under the American stock market. It is written by the Federal Reserve. It was free. It was automatic. And it began an incredibly long period of asset inflation that continues to this day. Investors realize they cannot lose as long as they buy the dip and hold. And everything that followed over the last 40 years, the leveraged buyout boom, the junk bond mania, the growth of derivatives into a $100 trillion shadow banking system, the dot-com bubble, the housing bubble, Every successive episode of euphoric risk-taking that the next 40 years would produce was built on that one sentence issued at 8:41 a.m. on October the 20th, 1987. None of it would have happened in a world where the central bank was not standing behind every asset price with a printing press. And that brings us to today. I mean, there's a reason we're $40 trillion in the hole. It all started back in 1987 with Alan Greenspan. The Fed's mandate was price stability and unemployment. That's their two mandates. It was never to keep the stock market up. But once Greenspan uttered those words 40 some years ago, that's been the mandate, and that's what's keeping the markets up. The Fed will do whatever necessary, which brings us to where we are, 40 trillion in the hole. And one of the things that we're seeing is gold has now replaced the U.S. dollar as a safe haven. Foreign countries are selling treasuries and they're buying gold. And that's what we're seeing today. So everything I've been warning about the past couple months, years, inflation, the correction, I think as we move forward, we're inching closer and closer to that end game, to that happening. And I think the next correction is not going to be a 10 or 20%. I think it's going to be a fairly large one. So that's kind of the market update, a little history with Alan Greenspan. We're going to move on to our mailbag. We get this quite a bit when people come in. What happens if I retire earlier than expected? You know, people get downsized, people get laid off, their jobs get eliminated. What if I get laid off? I have to stop working. Can I afford to retire earlier than planned? And how do I bridge the gap before Social Security starts? Well, the first response I would have to that is take a breath and sit down and review your options. Don't have any knee-jerk reactions. A lot of people, the first thing they do, they run down and say, hey, I got to start Social Security. That may or may not be what you need to do. I think what you need to do is sit down and look at your plan, look at how it's set up, look at what your options are. Are you looking at maybe a part-time job? Maybe we do take Social Security a little earlier. Maybe you have other assets we can spend down and still hold off on the Social Security. But the bottom line is get together with a financial advisor and see what your options are if you get downsized or have to retire earlier than what was originally expected. Our client portal, some of you may be using it on your phone, our client portal. And one of the notes I was asked to send out to you is if you are interested in getting push notifications with updates about new content in the app, make sure to select allow notifications the next time you open the app on your phone. If you hit that allow notifications, you'll be getting all our current content. Upcoming events, we've got several, but the one we're focusing on right now is our Blue Rocks, our annual Blue Rocks game. Annual Client Appreciation Night at the Blue Rocks will be taking place on Friday, August the 21st. Registration is now open. It's accessible through the email invite, or you can do it through the new Client Portal app. And as a reminder, each household is able to reserve up to 4 tickets. If you have any questions, please contact Chris in our office, and she'll be able to steer you in the right direction. And lastly, reviews. We encourage people to give us Google reviews. It helps us in the rankings, on the internet rankings, on the searches. So if you have a Gmail account, you can leave us a Google review. You can leave them for the Middletown office. You can leave them for Glen Mills. We're all circulating down Lewis as well. So if you haven't had a chance yet to do that, we would certainly appreciate it to give us a Google review. As we lean toward the end of the summer in our household, we got a couple birthdays this month, and we're gearing up. One of my sons is getting married in September, so that's top of mind for everybody in our household. That's the big news coming up in the fall. So I hope you are enjoying your summer. If you haven't had vacation yet, I hope you get to go on one soon. Survive the heat, stay in the house, the air conditioning, go in the pool, in the water. But I hope everybody has a great rest of July and bring on August. And if you have any questions, we're here to help. Have a great week.